In this video, I'm going to be teaching you how to find profitable trading strategies in the stock market using a simple 3-step process. So step 1 is going to be to identify a baseline risk to reward. A risk to reward means you are going to be risking a certain amount of money, contracts, or shares in order to make a certain amount. Now for the example, let's use a risk reward of 1 to 2, where we are risking 10% to make 20%. Based off of that risk reward, you then have to figure out what your break-even win rate is. And in this case, a 1 to 2 risk reward with a downside or an average loser of 10% and an upside or an average winner of 20%, well, that means that we'd have to achieve at or above a 33.33% win rate to be profitable. Now let's use a 1 to 3 risk reward as an example, where our downside is still 10%, but our upside is 30%. You can see here our risk to reward ratio is a 1 to 3. Now, based off of that, our break-even win rate is 25%. Now, once you've identified your risk to reward ratio that you want to start with as, like I said, a baseline, and you've figured out what your average loser or your downside and your average winner or your upside is going to be in percentages, and then you've also gone about figuring out based off of those two variables what your break-even win rate will be. Now it's time to take this to the market and actually test your strategy to see if we are able to achieve at or above your break-even win rate, hopefully above, right, in order to be profitable based off of this desired risk to reward ratio and average winner and loser. Now I'm going to give you a couple examples on the trading platform that I use. We're actually going to go back, rewind in time, and we're going to back test this strategy. If you didn't see the last video, I covered how to go about using this on-demand feature and correctly and properly back testing. If you want to go check that out, I'll link it in the description. But for the purpose of this video, we're going to go about trading this 1 to 3 risk to reward. Okay, so our downside or our stop loss, okay, or our average loser, right, is going to be 10%, and our upside, our average winner or our take profit, is going to be at 30%. Okay, so we've rewinded back in time to May 3rd at 10:53 a.m. You're sitting there, and that strategy, whatever it is, however you've got about deciding what stock to trade and what direction to bet on it going, well, you get a buy signal to go short on Tesla. We're going to go about trading this 1 to 3 risk to reward with our 10% stop loss in place and our 30% take profit in place. You can go in with a market limit order, however you normally go about trading, but for this example, I'm just going to auto send and I'm going to go in with a market order. Okay, so now we are in this trade. We got filled on our order, and you can see our stop loss is set at 10% and our take profit is set at 30%. Now, what you want to do is you essentially either can skip ahead, fast forward, and you want to see if your stop loss or take profit gets hit first. Okay, so now you can see after waiting and fast forwarding about 3.5 to 4 hours after that entry, we actually would have gotten stopped out for a 10% loss. Now you're going to repeat this process as many times as possible, right? You're going to go back and work day by day through the last month to 2 months worth of data, looking at the chart or looking at whatever it is you're making your trading decisions based off of. Okay, gonna rinse and repeat. Let's say we've taken 10 trades and we've got stopped out on 8 of those. So that means our win rate is at 20%. And knowing that, well, we're actually not going to be profitable, right? So if we enter 20%, we could see we have an expected return of -2, which means we're not profitable because we needed to achieve at or above a 25% win rate. Let's make an adjustment. Instead of having a downside of 10%, let's adjust our downside to 15%. And let's trade a 1 to 2 risk to reward. We're going to start back over. Let's say we started on May 3rd at 10:30. Okay, we're going to go back to the exact same market scenario when you got that initial Tesla buy, signaling that you wanted to go short on Tesla. We're going to trade a 1 to 2 risk to reward where our downside's 10 and our upside is 20. And you're going to place that order and wait to get filled. Now that we're filled, we're going to go ahead and we're going to fast forward. Okay, you can see we are now up almost 13%. We're getting very close to our take profit. Okay, and I've just been fast forwarding. So we'll see here if we can hit our TP. And there we go. We locked in 20% profit. All right, now back to the drawing board. Let's say after we've taken 10 trades, we can see that, hey, we've actually won 40% of those trades. Now, as you see, we'll continue adjusting until we've essentially found the most profit possible. So let's say we want to now trade this 1 to 1.5 R, okay, on a 10 to 15 basis. We're going to go back to the drawing board. Let's say we're going to trade that 1 to 1.5 R, -10 downside, +15 upside. And we're going to go back to our first trade and obviously walk all the way through those 10 trades or however much data we're pulling from. And we are going to place that order again. Okay. And we're going to see this play out one more time. Okay. We're getting close to TP. Boom. Okay, now we hit our take profit. We do that another 10 times. I think you guys are starting to get the point. Essentially, we're just adjusting our risk to reward and we're going back. We're simulating historical data. We're actually placing the trade just as we would have in a live market, but we're able to test these different risk to rewards and then go back to the drawing board, right? And punch that data in, see what our win rate would be based off of that risk to reward, because the risk to reward you choose and trade will directly affect your win rate. And then let's say after another 10 trades, well, we've actually won 60% of those with this new 1 to 1.5 R at a 10 to 15. And you can see now we have a positive 5% expected return. So we've gone from a 1 to 3 risk to reward to a 1 to 2 to a 1 to 1.5, where our downside is 10, our upside is 15. Now we're achieving a 60% win rate after back testing, and we've achieved an expected return of 5%. And so we've just worked through this progression of losing money, pretty much trading flat, and now making money, right? A -2% expected return was our first data point, trading that 1 to 3 R on, I believe it was a 10 to 30. And then we were pretty much flat at a positive 2% expected return, right? And then we've progressed now into being profitable. So that is how you're going to back test using risk to reward, win rate, and obviously average loser winner or upside and downside, essentially your stop loss, take profit. That has to remain consistent. And then you have to remain trading a consistent position size for this to all work. That is how you actually go about not only finding profitable trading strategies, but actually seeing if what you're doing right now is going to result in actual profit or not. So you're going to be able to refine current trading strategies you have, and you're going to be able to go out there and find new trading strategies on your own by using this 3-step process. And just to recap, step 1, again, find that baseline risk to reward. Step 2, identify your upside and downside, okay, whether that is -10, +20, and then based off of that, what is the risk to reward? If it's -10, +20, well, that is a 1 to 2 risk to reward. Then get out there, actually back test that strategy, trade the stock, trade the direction, buy the contracts or whatever asset you're going about trading, collect the data, find that win rate, reference your break-even win rate, and then figure out if you're going to be profitable or not. So if you guys are interested in learning how to trade yourself, click the first link in the description below. I offer a mentorship group. You can learn more about what is included. And I hope you guys enjoyed this video. I want to help you at the end of the day. And I know this is a rather complex subject, but all of the contents in my mentorship will cover all of this in much more detail. Subscribe for more. I'll see you in the next one. Later.